In the intricate web of global commerce, a delicate balance is struck between nations. Like a vast ecosystem, the flow of goods and services sustains economies and shapes the destinies of billions. But this delicate balance can be easily disrupted. In recent years, a new predator has emerged, threatening the stability of this complex system: tariff turmoil. Its presence has sent shockwaves through global markets, leaving businesses and consumers alike grappling with uncertainty. Join us now as we journey into the heart of this economic storm, exploring the far-reaching impacts of tariffs on the global stage. From the bustling factories of China to the boardrooms of Wall Street, we'll witness firsthand the struggle for survival in an era of unprecedented trade tensions. This is the story of how tariffs are reshaping the global economy and the consequences for us all. The United States, long a bastion of consumer confidence, is now grappling with a new reality. The specter of tariffs looms large, casting a shadow of doubt over the nation's economic future. As the cost of imported goods rises, so too does anxiety among American households. The fear is palpable, a sense that the familiar comforts of life are becoming increasingly out of reach. This unease is reflected in the latest consumer sentiment data, which has plummeted to its lowest level in months. A clear indication that the threat of tariffs is taking its toll on the American psyche. Across the Atlantic, a different kind of drama is unfolding. The European Union and China, two economic powerhouses with a history of trade disputes, are now finding common ground in the face of a shared threat. The issue at hand is electric vehicles, a burgeoning industry caught in the crossfire of global trade tensions. Both the EU and China have accused each other of unfairly subsidizing their own domestic EV manufacturers, creating an uneven playing field. This potential trade war threatens to stifle innovation and drive up prices for consumers, hindering the global transition to cleaner transportation. But now, a glimmer of hope emerges. In the tumultuous world of global trade, even the slightest shift in policy can send ripples across the markets. Today, we find ourselves amidst a fragile truce, a temporary reprieve in the ongoing trade war between the United States and China. President Trump has announced exemptions for major tech products from steep tariffs, a move that has sent Dow Jones futures soaring. Companies like Apple, Nvidia, and Dell, giants in their own right, have been spared from the brink of a potential 125% tariff on Chinese goods. This respite, however, is a temporary one. Commerce Secretary Lutnick has confirmed that the exemption is short-lived, a mere pause in the escalating tensions. Within a month, sector-specific tariffs on electronics and semiconductors are expected to be implemented. The trade war rages on, a delicate dance between two economic superpowers, each vying for dominance in the global marketplace. The stakes are high, and the outcome remains uncertain. News of the tariff exemptions has reverberated across the globe, sending shockwaves through the financial markets. Global tech stocks, buoyed by the news, have surged upward, a testament to the interconnectedness of the global economy. The tech-heavy NASDAQ index, a key indicator of the industry's health, has experienced a significant jump, closing at 16,525.28, a 0.8% increase. This surge reflects the market's optimism, a belief that the worst of the trade war may be behind us. This policy shift, orchestrated by U.S. Customs and Border Protection, has exempted core electronics products from both a 125% China-specific tariff and a 10% global tariff. This move has injected a much-needed dose of certainty into the market, at least for the time being. However, the underlying tensions remain. The trade war, a complex web of tariffs and retaliatory measures, continues to cast a long shadow over the global economy. The temporary pause in tariffs may have provided a momentary boost to U.S. stock markets, but the underlying tensions of the trade war continue to cast a long shadow over the global economy. Wall Street, the epicenter of global finance, remains on edge. The initial euphoria of the tariff delay has given way to a more sobering reality. The trade war is far from over, and its ultimate impact remains uncertain. Concerns are mounting over the declining confidence in the U.S. as a stable and predictable investment destination. The dollar, once a symbol of American economic might, has shown signs of weakening. Adding to the unease, U.S. Treasury bonds, traditionally seen as a safe haven during times of uncertainty, are also experiencing a decline. The simultaneous weakening of the dollar and treasuries is a rare and troubling signal, one that has investors around the world on high alert. The world of global finance, much like the natural world, can be a volatile and unpredictable place. In the spring of 2025, amidst a storm of trade tensions, President Trump's announcement of a 90-day tariff pause came as a much-needed respite. Like a break in the clouds allowing sunlight to reach the forest floor, this news triggered an immediate surge in the stock market. The Dow Jones Industrial Average, a key indicator of market health, shot up by an impressive 1,800 points. This dramatic response underscores the sensitivity of global markets to political decisions. The mere suggestion of a trade war can send shockwaves through the intricate web of international commerce, impacting businesses and investors alike. This pause, however, was not a universal reprieve. While many countries breathed a sigh of relief, China found itself facing a new wave of tariffs, a 125% increase on its goods entering the U.S. The trade war, it seemed, was far from over. In the tumultuous waters of the financial markets, seasoned investors, like experienced sailors, must learn to navigate unpredictable currents. The trade war initiated by President Trump's Liberation Day tariffs created a perfect storm of volatility, catching even the most seasoned hedge fund managers off guard. Among these financial navigators were firms like EDL Capital, macro-focused hedge funds that specialize in predicting and profiting from global macroeconomic trends. When markets plummeted in response to the initial tariff announcements, EDL, with its keen sense of the shifting tides, capitalized on the downturn, recording a remarkable 6% gain in a single day. However, the financial seas are rarely calm for long. President Trump's unexpected decision to delay the implementation of certain tariffs caused a sudden market rebound, catching many off guard. This unexpected turn of events led to losses for some who had bet on continued market decline, including EDL, which experienced a 1.4% dip. This episode serves as a stark reminder of the inherent unpredictability of financial markets, particularly in times of geopolitical turmoil. The year 2025 began with a tempest of uncertainty in the global markets. President Trump's abrupt shifts on import tariffs left investors reeling, drawing comparisons to past financial crises. The sudden imposition and subsequent delay of tariffs created a climate of fear and confusion, leaving many wondering how to safeguard their financial well-being. Despite a brief respite offered by the 90-day tariff pause, investor confidence remained fragile. The markets, much like a herd of gazelles startled by a predator, remained on edge, prone to sudden and dramatic swings in response to even the slightest hint of trouble. In such turbulent times, the instinctual response might be to retreat, to seek shelter from the storm. However, just as animals adapt to survive in challenging environments, so too must investors adjust their strategies to weather periods of economic uncertainty. Diversification, a cornerstone of prudent investing, becomes even more critical during times of market volatility. Spreading investments across a range of asset classes, sectors, and geographical regions can help mitigate the impact of losses in any one particular area. In the heart of the financial jungle, a truce has been declared. President Trump's 90-day pause on tariffs offered a glimmer of hope, a brief respite in the escalating trade war. Like a weary traveler finding shade in a scorching desert, the markets reacted with cautious optimism. But this reprieve, like the fleeting shade, may not be enough. The damage, it appears, has already been done. The memory of conflict lingers, casting a shadow of uncertainty over the entire global ecosystem. Goldman Sachs, a seasoned predator in this financial savanna, has issued a warning. The 90-day pause is unlikely to prevent further market declines. The Dow Jones, a barometer of the market's health, has already shown signs of succumbing to the pressure. The financial world, much like the natural world, is a place of constant change and unpredictable events. But even the most seasoned observers were taken aback by the events of April 7, 2025. A misleading headline, claiming a 90-day tariff pause for all countries except China, swept through the market like a sudden squall. The effect was immediate and dramatic. The S&P 500, a key indicator of market sentiment, surged upwards, gaining an astonishing $2.4 trillion in value within a mere 10 minutes. This sudden surge of optimism, however, was short-lived. As quickly as the rumor had spread, it was extinguished by a firm denial from the White House. The market, caught in the grip of this false hope, reacted with a swift and brutal correction. The world of finance, much like the natural world, is a complex and ever-changing landscape. It is a realm of both immense opportunity and inherent risk, where even the slightest tremor can send shockwaves through the entire system. As we have seen, the recent trade war, fueled by escalating tariffs and political uncertainty, has created a volatile and unpredictable environment. The path ahead remains unclear, shrouded in a mist of uncertainty. But even in the face of such challenges, there is hope. Like a resilient forest adapting to a changing climate, the global economy possesses an inherent ability to adjust and recover. The key to navigating this uncertain terrain lies in understanding the forces at play, adapting to the changing landscape, and above all, remaining informed.